Elon Musk is preparing the largest initial public offering in human history. At a $1.75 trillion target valuation, SpaceX would be worth more than every American defense contractor combined. Worth more than the market caps of Coca-Cola, McDonald's, Disney, Nike, and Starbucks all put together. And worth more than the top 10 companies on the London Stock Exchange combined. So if you're wondering who the f*** is buying SpaceX, a company losing $5 billion per year at the largest IPO valuation in history, well, the answer is you.
We're in a little bit of trouble, to say the least, because if you have a retirement account, whether it's a 401k or an IRA, well, pretty soon it could be invested in one of Elon Musk's companies, which is in fact losing quite a bit of money. So SpaceX is about to get away with a giant rug pull. And the victims of that scheme would be you, me, and just about everyone else who happens to have a retirement account, because SpaceX is even admitting to what they're about to do. And it gets worse because SpaceX isn't the only company that's about to pull a fast one on the American people. So what am I talking about here? I'm gonna try to explain this in a way that's easy to digest, because usually when it comes to like financial news or news about the markets, it's kind of hard to follow, but bear with me as I explain what's going on here. So tomorrow, Elon Musk's SpaceX will do an IPO, meaning it will go from a private company to a company that is publicly traded on the stock market. And that means that retail investors can soon trade its stock in the stock market, which sounds totally normal, totally fine, except the way that this is gonna go down is a little different, and it would skirt certain regulations that I think are necessary. So you're probably familiar with SpaceX and its like rocket launches, but that company also includes, like an umbrella that also includes Starlink and Elon Musk's AI model known as XAI. So last year, these three companies reported a loss of $5 billion on revenue of $18.5 billion. So it's worth noting that Musk has been hinting that he wants to merge Tesla and SpaceX. So here's where the rug pull comes in. So per the New York Times, which reported on this, SpaceX convinced the major stock market indexes to basically abandon their investor safeguards, which sounds like a great idea. Sounds like a fantastic idea, right? Abandoning safeguards is always a good idea when you're talking about something that could affect a ton of people, certainly those who are invested in this company, or those who could be invested in this company as part of their retirement account. So traditionally, indexes like the NASDAQ do not include companies until 1 year after their IPO. All right, so they wait a year, but in this case, that would not happen. Okay, so SpaceX told the indexes to basically speed up the process on its behalf, and guess what? They obliged, they listened, they obeyed. And so NASDAQ, among other indexes, will be listing companies like SpaceX just 1 week after their IPO. So that's a big safeguard that they're basically like throwing out the window. The changes mean a large swath of index funds, which millions of Americans own in their retirement funds, pension plans, and personal portfolios, are poised to hold SpaceX shares soon after the company goes public. And guess what? SpaceX has seemingly confessed to this scheme that they're carrying out. Take a look.
While most initial public offerings allocate 5 to 10% of the offering to retail investors, SpaceX is targeting 30%. And Brett Johnson, the CFO of SpaceX, told a room full of bankers on the record that retail is going to be a critical part of the IPO and bigger than any IPO in history because, in his words, retail buyers have been incredibly supportive of us and of Elon for a long time, and we want to make sure that we recognize that. Translated out of corporate speak, the CFO of SpaceX told a room of bankers that the largest initial public offering in history is going to dump 30% of its supply on retail buyers. And not because retail buyers help with price stability, not because they help with long-term shareholder alignment, because they're loyal to Elon. And that's how this story unfolds. The buyers and sellers of SpaceX don't show up at the same time. The buyers are forced in early, the sellers are unlocked later. Shares move from insiders, sitting on a low-cost basis, to passive funds and retail, whose retirement accounts absorb them at peak valuation. Portfolio manager George Noble said it best. Your 401k is the exit liquidity.
Your 401k is the exit liquidity. But this is bigger than SpaceX because these new rules or lack of rules, right? You're getting away with that with tossing that safeguard out, which are referred to as fast entry rules, would soon apply to other AI models like OpenAI and Anthropic, which are also set to IPO very soon. The NASDAQ has both denied the finer details of this story while also admitting to the overall premise. So let me tell you about that. As the New York Times reports, NASDAQ's president, Nelson Griggs, said in a Bloomberg interview in May that the exchange had begun discussing index rule changes more than a year ago. Since SpaceX, Anthropic, and OpenAI were so big, he said, it was important that index fund investors not have to wait to have access to them. So for whatever it's worth, the S&P 500 has actually stood firm, vowing to not let SpaceX into their index until at least a year has passed. And I think that's the right thing to do. So something to keep in mind. This is the kind of information that can potentially power your investment decisions, but this is a disaster. And to be quite frank, most people, the vast majority of Americans don't even have the money to participate in the stock market or save for retirement. I think that's the number one problem. But if you are fortunate enough to have somewhat of a nest egg, a lot of Americans just kind of they contribute money to their retirement account and they don't really think about it after that. They're not constantly looking at it or changing what their investments are. So a lot of people, they're just kind of on cruise control, and these rule changes could absolutely like devastate their portfolio. And they have no idea about it. So hopefully this information helps you guys out a little bit. But the bigger point, the broader point, is that this goes along with what has led to a huge disparity of wealth in this country, a concentration of all the wealth at the top while the rest of us suffer. It's deregulation. This is a form of deregulation that is going to make Elon Musk a trillionaire. But the real question is, who's left holding the bag?
Every time you ring the bell below, an angel gets his wings. Totally not true, but it does keep you updated on our live shows.